So today, 20th July 2024. So when I opened newspaper Economic Times, so I found two big news. One is rupee and at record low of 83.66 per dollar. And the second news is slower deposit growth may create structural liquidity issue for bank. RBI Governor Saktikanta Das said. So here are two things. The thing is, what that does means where slower deposit growth. Slower deposit growth means people are not willing to do saving bank deposit or fixed deposit. They are not interested much on that. But even though the news is there, the fact behind it, why people are not interested on deposits, saving bank or fixed deposit, that is not clearly written. So I thought of discussing that. So there could be three major reason possibly which is leading this. First thing is people are not willing to do traditional fixed deposit. They are moving towards stock market, or you can say equity related uh, products. When I say equity related products, there are multiple ways you can have exposure to equity market. Either directly through a demat account you can buy shares, or the best way is to do through mutual fund. If you do not want to involve much in the resource or resource activity, like whether the share is doing good or bad, so you can directly believe on mutual fund and go with that. And other thing is the third, I believe, uh, ULIP policies. ULIP policies are nowadays trending because uh, when you say life insurance and all, people are not going by traditional policies. People are preferring ULIP policy, which is also a good way of exposure to equity market. Other thing, the second thing, what I believe people are not interested for fixed deposit or saving deposit could be there are a lot of cyber crimes happening with OTP, KYC related things. You are getting call that I am from FedEx, you have something parcel, please share your OTP, and your bank account is getting empty. So that could be a fear because of the high digital economic condition and OTP related, KYC related fraud. People are feeling maybe unsafe towards that. And the third thing, what could be probably, let's say, in bank there are two types of customer. One type of customer who do the deposits, like we ordinary people, we do not have much thing. We just believe on bank deposit. With our small savings, we do at bank deposit. But there are people who take loans. Other side of it, those people. There are less amount of people like us, ordinary people who used to take loan. There are more people towards a corporate loan. Corporate loan means they used to take their loan for corporate related activities, and there is a huge fraud happening related to Vijay Mallya, Nirav Modi, and other people. We put our hard on money in bank, but they used to take it easily and go and fly. So other aspect of it is um, when RBI Governor Raghuram Rajan or Urjit Patel was there, they are pure economist. They used to calculate GDP and other things based on pure economic calculation or economic formulas. But now, if you see RBI Governor, if instead of an economist, if it is a bureaucrats, and they try to create their formula based on their their side of it. Okay, so that formula, see, if you see the mathematics and economics formula, they are not going to easily change. 1,000 year back or 100 year back, whatever formula you are using, still we have to follow the same formula. Because but if you see, the formula got changed in 10 year back. The formula which used to get calculate the GDP is now not happening. There is some separate formula government created to find out GDP. If you count the today, or if you calculate today GDP based on the older formula, it would be maximum 4 to 5%. But whereas with the new formula, what the recent government has introduced and doing, so you will say 7%. So the true GDP is whether it is really 4 to 5% or 7%, is person to person varies, because the formula is different. So that's why I mean, but it's a alarming situation, because if we have slower deposit rates, it will create liquidity issue. Liquidity issue means, let's say someone going for asking a loan, so if bank doesn't have deposits, how they will provide loan? So that will create economic imbalance.